Alrighty, what's up, guys? Welcome to another special live session. It's a bit later in the day this session. Hopefully, people can get on and got the email from earlier in the day. Uh, Today's session, if you take a notice, the markets are closed. Today's session is going to be a very, very important session because the trading year has pretty much come to a close. Next week, it's gonna be pretty quiet. We might have some surges in volatility, but the week after that is Christmas week, and then we have New Year's. It's gonna be pretty dead. So I thought this would be a good chance to strip everything down and get a clear idea of what's gonna happen in 2020, at least from a technical standpoint and from a long-term standpoint. We just had the UK elections, and we know what happened with that. We'll discuss that when the session starts. But I'm just gonna get everyone a chance to get ready for this live. For those that are on YouTube, make sure you have your questions ready, or you can jump on the portal right now. The choice is yours. But this video, this whole session is gonna be kind of cleaning up all our charts, our past levels, and then analyzing from the very bottom so you can understand our strategy. And I think this is the best way that everyone can get an idea of how we go about things and whether the strategy makes sense. So let's go. Let's start with pound dollar, which was a very interesting trade we took this week. And it wasn't a trade that we took, it was more of a prediction because we didn't want to trade the UK elections. But what we did say is that if it was bullish, we're going to see this reaction to this very exact level. And so when Boris Johnson won, earlier in the day, you can see pound dollar come pretty close to our stop loss. And this one huge candle went straight to that line that we drew, I think, 2 days ago. And so the absolute beauty of price action and technical analysis, just perfect, because it could very well have stopped here or a bit above here, but to see that it go to the pip, the very pip, and then come back down is amazing to see. So I did let everyone know to enter this on their demo accounts just for the sake of seeing what happens, and it did play out pretty nicely. So with that being said, let's get into our predictions for the year. And right now we're on the portal. We're going to go through the majors. We're going to go through Euro USD. And we're going to basically strip down all our levels and do analysis from the very beginning. So, new year, new charts. So let's remove all drawing tools. And a clean chart looks so nice. So we're going to start from the monthly time frame. This is how our strategy works. We go on the monthly time frame. And what we do, the very first thing we do is focus on where price is right now. So price is down here. So when we zoom out, what we want to do is draw first our key levels. And so do I see any key levels near where we are? Well, there is some key resistance up here, and there's some key support down here. So because there's a lot of wicks in these areas, I'm actually going to use the rectangle tool to kind of display our resistance zones. So you can see this resistance zone captures a lot of the end of the wicks and a lot of activity. And we're going to do the same thing with our support zone as well. You can see we have some sort of support down here. And so I'm going to do my best to capture the most activity. Now when we get to the smaller time frames, you can clean up these zones. But for now, it's fine. And now what we also do is look for any trend lines that we can draw, trend line channels, patterns. Off the top, we can see there's a clear downtrend for the euro. And so, just for the sake of drawing it, we're going to draw a nice trend line down. So you can see that, connecting the lower lows, the lower highs of the downtrend. Perfect. Anything else that I can probably draw? There might be a channel. Let's actually see. I wouldn't call it so this is good for now. And now at this point we move down to the weekly time frame, and this is where we get down our weekly levels. And so our weekly levels are basically similar to these levels. We're looking for prices we're looking for prices where there's a lot of wicks. So we see a lot of wicks here, and where, you know, rallies have failed or rallies have stopped. So a near-term support, we're just looking, is right around here. You can see. So I'm gonna get my horizontal line, and I'm gonna use it to draw it right here. You can see these wicks come in. So when every time we go to resistance, we come to this level, we pop back up. We come to this level, we pop back up. We come to this level, we break below. We come back up, we pop back up. So you can see it's a nice clean level, and you can see we recently had a pretty nice close to a rebound from this level. So if we were to go short right now, this would definitely be a take profit, and that would be 1.08570, around there. Now looking for any near-term resistance levels that weren't captured by this zone. Taking a peek, we could probably draw it just at these wicks right here. So if I get out my tool and I'm looking, I'd say here's a good point to put it. So you can see in the recent past, this level here we used as support multiple times, and we also used it as resistance a few times. You can see this wick went pretty close to that line. So now we have our monthly support, monthly resistance, and we have our weekly levels down pat. So now we have a very, very clean chart. Now on the higher time frame, right now off the weekly time frame, I obviously have a bearish bias for Euro USD, just because of the lower highs and lower lows it's creating. Now the same thing we're going to do, is there any trend lines that we can draw or channels? And there is a pretty nice channel that we can draw here, and we'll see how it comes into play. So trying to be as neat as possible. Boom. So a channel is basically two trend lines, one connecting the lows and one connecting the highs. And you can see a pretty nice trend line, a channel right here. This is called a descending channel because price is moving downward. And you can see we did have a recent touch of that top trend line. And one of the things about our strategy is we like to trade with the trend and not against it. We do trade against it, but most of the time you want to trade with the trend. So in that case, from the weekly time frame, you see the short just from the levels, and now we have an extra technical confirmation by the channel, and we see this is a pretty nice bearish candle, which we go to the daily time frame, we'll probably see a reaction. So now that our weekly is done, let's pop back to the daily time frame and see what we can see there. Going to the daily, price is a lot more clearer now. So on the daily time frame, you can actually see that we have some minor levels at play here. For example, we do have a daily resistance here. Okay, you can see a rally stopped here, a rally stopped here, a rally stopped here. You can see price wicked all the way up here, and now we're printing a shooting star, or I like to call it a teardrop candle, or an inverse hammer, whatever you want to call it. It is a sell signal, quote unquote sell signal. So it's looking pretty good. Now, at the same time, we drew a daily resistance. Is there a daily support that we can draw? Yeah, there is. There is one, at least near term, and that is right here. So you can see, once again, we come down here, we use that support. A lot of activity. We break below. When we close above, we make a rally back to resistance. From resistance, we come back down. We get some momentum from this level. We come back down. We get a rally. So this is our daily levels right here. So if we're going to short, and man, this is a perfect setup. If it wasn't the holidays, and if it wasn't a Friday, right now I do a live signal call to short Euro to a target of 1.09941. So you can obviously see the short. Part of our strategy is trading ranges and trading between levels. Price is usually magnetized to these key levels, and since it went to the top of this range right here and it got rejected, and we're getting a lot of sellers pouring in, the sellers will usually drive the price down to the bottom of the range. So, and the range, what I mean by the range is this right here. Okay, I'm trying to illustrate this very quickly just for the first pair, and then you guys will get the hang of it, and I'll probably breeze through the other ones. But let me bring out the arrow tool, and you can see this is what we're trying to target, this trading range right here. You can see So what price tends to do is do what it has done in the past, and that's not always the case, but usually the probabilities favor that sort of line of thinking. So we're trying to target this move, and this has been the bread and butter for our trade, for our trading, kind of trade logs since we started in April. Now that's what I see for Euro USD, from a kind of a short term going to long term. Obviously, long term, if I just pan out here, you can see the channel. This channel is still very well in place. So just from the weekly time frame and this channel, I do see further lows for the euro, especially because U.S. and China have finally come to a phase one agreement that's well on its way. So the last time they made a quote-unquote deal, the phase one kind of fell out. There was still, back and forth, but this time a pretty decent sized deal was made. And also, Trump is a very happy man because Boris Johnson won the election, and he also tweeted that they'll be making one of the biggest deals with the United Kingdom after Brexit. So I expect a lot of dollar strength moving into next year. And if you recall, for majority of the year 2019, U.S. has kept their rates very low, and so it is time to kind of transition back into higher rates and getting back into a stronger dollar. So I do see lows, and lows could mean probably down to 1.07314, and so that's probably my end of the year target, maybe even lower to this resistance support zone down here. But just for I guess track record's sake, and to see a year from now how it panned out, these are two places where I do see the euro coming eventually, maybe even lower, who knows, but definitely with the next few months we might see 1.07300, and then as far as 1.05. So that's what I see so far, and even the short term, there is a short setup for Euro USD. So boom, that's how simple it is, and we do this every Monday through Friday, and we've been averaging around 300 pips per week at around 80% accuracy. This week was kind of on and off, but that was a lot of news just coming into the way. But the track record is all on our website. You want to see my pip counts, go to our website, Forex Signals, past results, and you'll see my pip counts for the past few months. RP Forex right here, and boom, it's all right there. So October, this was when the trade war was at its kind of peak, and then you can see we've been on a nice roll after that. So just a word of advice, don't get caught up in losing weeks. So look, we had a 363, 360, 1,000 pips for October, and then November we just killed it. We just killed it. Look at all those greens. Only one losing trade in the month of November, and it's all using this strategy right here. Nothing special, no other technicals, and this is the way. This is the way, man. So euro, long-term bias short, short-term bias short. Let's move on to pound dollar, and hopefully you guys are kind of getting the hang of this, and we can see our beautiful prediction right here. Now let's see if what's happening next. So we're going to remove our drawing tools once again and do the same thing over. Go to the monthly, and we can see right off the bat there is a nice support zone right here for the pound. We're going to get a rectangle tool and draw as such. And we can also see, looking to the left, pound does have some support in this area. So we're actually going to draw another support zone. So, and this support zone could be a potential area to maybe buy the pound, right? Because it can be a nice target. So that's nice. That's all fine. Is there any near-term resistance? I do see some here, and that's probably on the weekly time frame. But we can go down to that. But until then, this is a nice support. This is a nice support slash possible resistance when we come up here. Any trend lines that I can draw? Let's see. There could be. It depends how clean it looks. Let's try to draw this out. Yeah, so just drawing this trend line, it just makes things a lot more clear. We see our first trend line touch here, our second, and on our third possible one, we actually closed above. So in this case, the pound dollar is bullish, at least for the near term, because the pound moves a lot. It can move very quickly. So right now it does have a magnetization to this next level right here, this blue zone. So it could be a nice mid-term buy. Let's go to the weekly and do the same thing we've just done on euro. On the weekly, things become a lot more clearer, and what I mean by that is we can see there's kind of like a range again, from this blue resistance zone to this one. You can see it, and what we're hoping on and banking on is that when price does come up here and we get some sort of rejection, we could also short pound if it's there. If the short's not there, we do have potential to long. And so for long targets, all we do is look to the left and see when price broke above this level, where did it go and where did it stall. So let's say price broke above this level, where did it stall? Let's look to the left. So one point is up here. Just looking left again. Last time we were here, we stalled up here. So I'm looking for near-term targets, and one near-term target would probably be right where these wicks are, and they align with this line. So I'm gonna get a horizontal line, and if you have any questions during this process, shout them out in the YouTube chat, and I'll be more than happy to help. So boom, you can see this rebound, kind of a stalling here before we go higher. If you look, last time we rebounded, we wicked very high to this specific price point before going lower. So if we do break this level, this would be probably one of our long-term targets with intermediate targets along the way. So right now, just based off pound USD breaking this long-term trend line, I am bullish, and especially with Boris Johnson being elected, it could be good for the pound. So let's see on the next smaller time frame what levels we can target. Obviously, we could put a horizontal line just here to depict this previous resistance. You can see a lot of wicks at this level, and currently that's where we spiked through, and price is being pushed down below. So this is a nice way to understand whether if it's a fake out or it's actually going to go that way. So this looks like a nice clean chart. You can see two nice zones and one nice weekly level, a nice weekly resistance, and we can also draw a weekly support just down here. You can see support here, support here, support here, support here, and we use this support before this rally. So we have our monthly supports zones down, and we have our weekly levels down. Let's check out the daily and see what we have. So on the daily, we can see that huge candle from just the election results in general and some of Trump's tweets. So for euro, I gave a short bias, and if we pan out, we can kind of see this blue line we draw, why it's a good resistance. It was resistance here, resistance a few times here, and price has squeezed below. So just like we have a short for euro, we potentially do have a short for pound, although it's not as convincing, especially just with the new election. So keep that in mind for the first week of January and going into that whole month, that this could just be a kind of a impulse move before it does push higher. So don't tend to short right away. What we'll be looking for is rejection, maybe on a daily, maybe a next daily candle as a rejection candle to signify we're going lower. On the flip side, if on Sunday the candle does close above this level, we could have a potential to long to this blue region of 1.40,000, a nice psychological level for the pound dollar. So we could have this, and obviously stop loss will be very, very tight. So something like this could be in play. It all depends on next week's closure and what kind of market volume we have. But near term, it does look like a potential long, and long term looks pretty bullish as well. So it's kind of a mixed bias for pound dollar, and that's given just because it had a major election, and it's right in the nick of time of the holidays. So there's not really kind of a clear way to decide, but the technicals are showing mixed. All we need to do is wait for either some sort of activity here or activity down here to say we're going short, activity up here saying we're going long. Now we're gonna do one more pair, and that's gold, and it's a commodity, and it's kind of acting as a safe haven through this trade war. And now that this trade war is kind of coming on its way to a resolve, we'll see what kind of things we can see for it. So we're gonna actually clear all this once again, give a bias for gold, and then we will be good for the session. If anyone has any questions, please let me know. And this session will be posted on our YouTube and our portal to rewatch later in case I'm moving too fast. So let's go back to the monthly time frame for gold. And you can see gold, when it first started trading, at least in this broker, it opened at 293 bucks. And since then, I mean, gold has accumulated in value almost as high as almost 2,000 per ounce. Pretty cool. So anyways, we're going to do the same exact thing here again. We're going to draw our near-term resistance and support zones. Obviously, a resistance zone could be up here. So we're just going to draw that because gold could move up there if it wanted to. So boom, nice clean cut covering all these wicks here. We can also draw a support in this zone right here. So that could be a nice near-term target. And if you look, this is beautiful. This is price action. This previous support after gold made its rally to almost 2,000 bucks, 2,000 per ounce. It kind of used this as support before trying to push up. Support again before trying to push up before it finally gave way. And then for the past couple years, it's been chilling below this support level before it's finally come and used it as resistance. You can see this is the monthly time frame. So each candle here represents a month. So we spent 1, 2, 3, 4, 4.5 months. Actually, this will be 5 now because this month's not done. 5 months under this zone. So that is pretty crazy. And this zone dates back to 2011. So just based off this time frame, it does look bearish, right? It's a classic break, retest, rejection, going lower. But obviously, there's a lot into play. But just off the bat, it does look bearish. And at the same time, we could draw some weekly levels. For example, just to cover these highs right here, you can see resistance, 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 resistance. Finally, we broke out 1355. Pretty good level, and also some secondary support in case gold does slip. This could be one target. Another target could cover support here as well. So it comes down, rebounds, come down, rebounds, comes down, rebounds, rebounds, rebounds. So you get it. So a nice level at just under 1,200 per ounce. So you can see why the short is looking the way it does. However, it has broken out of this previous range consolidation period, so it could be trying to make another run back to these highs of 2,000, but it depends what next year is in store. So let's go into the weekly time frame and see what's up there. And the weekly time frame is definitely a lot more bearish. You can see the clear lower highs, lower lows, lower highs, lower lows. So definitely something to watch out for if you're holding gold valuables or just actually in your account. It could slip quite a bit in the next few months going into 2020. And you can see the last few weeks it has been pretty consolidative. You can see in the last few weeks, 1, 2, 3, 4, 5 weeks, it hasn't really moved much. Just printing spinning tops, hammers, inverted hammers, pin bars. Not really doing too much. So this could also indicate an impulse move either down or up. We've spoken about this in our previous live sessions as well. When gold consolidates in and around key levels, it's always due for an impulse move. You just have to know which way. So the weekly doesn't really give too much information. Our levels are pretty much down. It looks pretty clean to me. I guess a secondary weekly resistance we can draw is just to cover these wicks down here. You can see resistance here, resistance here, resistance here, and we did use it as some partial resistance back in June. So now we have some good targets for our shorts if we do go short. One being 14.25, next being 13.50, and the one after is 11.84. So pretty solid. Let's head out to the daily time frame to get a bit more clarity. So the daily time frame, you can see the kind of consolidative nature that gold was in. It was still in a downtrend, but not, not as an aggressive downtrend. You can see the retraces are very short and consolidative. So once again, we're going to draw our daily levels. So one level that's sticking out to me is right here. So I'm going to get my line out and draw it as such. You can see used as support, went up there, rebound from here, rebound from here, rebound from here, and you can see when gold broke out of this support, when it broke below support, it came back and retested it once and twice. So this again is telling me that there is a short in play. You can see on the first retest we got a rejection, a inverted hammer, and we had a sell-off. Another time we did have a similar kind of inverted hammer, but we did have a kind of a push. So this is something to watch out for. It's definitely giving me a mixed vibes, but it's still, in my opinion, 60% short, maybe 40% near-term long, but it's still screaming short to me. Now, next level we can draw is probably somewhere down here. We can see when we crushed this previous support, we stalled down here. We made our attempt to go higher. We came back and stalled down here. We went higher. So this is another level. So now we have our intraday, weekly, and monthly levels. So this way we can, short gold on an intraday level, long-term swing, whatever the case may be. There's no discrimination. So with that being said, let's pop to the 4-hour, see what's really going on here. In the 4-hour, it's a pretty clear range between 1485 and 1453, and these are very similar as we had when I cleared the gold chart, and these are levels we talked about throughout the year. So this price action strategy will make sure your levels are consistent throughout. It's very easy to draw. And so right now, you can see, the last push earlier in the week, and it looks like gold near term it's a buy, as in it'll probably go back up to 1485, and all we're waiting for is a rejection from this area to short. On the flip side, if we get a break above this level, we can go long. And you may be asking, where do I know to go long to? Just look to the left. You can see a lot of activity here. You get out your nice horizontal line, and boom, you can see every time we closed above this level right here, 1485, where did gold go? Let's see. It went to 1514. When it came back down, it went to 1514. When it came back down, it consolidated, and then went to 1514. It came back down, went to 1514. Same thing, it tried to make a rally, and then finally the sellers take over. And so we're just trying to get these trades, because if you look at this range right here, now I love to illustrate this because it's so simple. Let's see. So this is where resistance was made, right here. This is one winning trade. Boom. And this is over 200 pips. One winning trade. Just from one level. Just from this level. Boom. Another winning trade. That's another 200 pips. From here, you can take longs. And look. Let's say you want to try to long from here. You still went halfway. This is around 70 pips. This is a good amount of profit. So the thing about ranges is, sometimes ranges play out all the way. Sometimes they play out half, 30%. Whatever the case may be, you're still making profit. So this is 70 pips, another winning trade. Again, when price came down here and it closed back above this level, another 70 pips. Okay, when price came back down, this is 40 pips. Okay, and when price came back down, and boom, the full range. This is 1, 2, 3, 4, 5, 6, 7 winning trades, and another short from here. This is 8 winning trades, a buy from here. This is 9 winning trades, and a buy from there. That is 10. And then obviously another one, just from 2 levels. And how do we know when to enter? You don't always buy from support. You don't always sell from resistance. You look for reactions from the level. You look for bearish hammers, bearish engulfing candles, the 3 soldier pattern. Use your intuition, use fundamental analysis, and when you combine all those things and you play the probability, and with risk management, you can make easy profits. And so the same thing we're looking for down here. We have our support, perfect. We have this level we're kind of reacting to. All we want to see is when we get up to here, we want some sort of bearish engulfing candle like here, some sort of inverted hammer like here to know we're going lower. If we don't get that and we close above, we're gonna try going long to 1513, and that is gold. So to summarize on the daily time frame, because I know it pretty quickly. Actually, let's go back to the monthly. Monthly looks bearish to me. Okay, from a historic standpoint and just from a psychological standpoint, it looks bearish. Okay, we're testing previous support. Even on the weekly time frame, it still looks bearish to me, and we can see that like so. Still making higher highs, higher lows. Looks pretty bearish, although we're consolidating, so we are due for an impulse move. And then we just expand the daily. We have two scenarios. If we come back up here, we have a possible short of rejection. If we close above, we have a potential to long to 1513. And that's how simple the strategy is. So those are our biases in the near term, medium term, and long term for the majors, Euro USD, pound dollar, and gold. And that's how our strategy works. It's that simple. It's very easy to pick up on. All it takes is practice, and this is how we operate in our trading room every single day. We don't draw our levels clean every day because once we draw them, we just see how the charts are reacting. So it's very little amount of time that's spent on the charts, but it's very, very effective. And so for those that enjoy this session or they'll be watching it later on YouTube, if you're trying to sign up for our trade room and you're trying to get these kind of results from me and all the other providers, all you have to do is go to forexlens.com and then click trading room. Just click it right here, and it's going to tell you to sign up for free membership. If you get the free membership, it's only the Monday and Friday sessions. If you want all the sessions with me every day of the week, get full access for $97. You're gonna get 5 signal providers, including me, and I'll give you 25% off your first month with this coupon code. The coupon code is 25 capital O, capital F, capital F. Enter this coupon code at checkout. When you click this, you're gonna fill out a quick little form. Boom, boom, boom. Quick little form. Click next, and put this coupon code. You get 25% off your first month, and you will see how much your trading changes and how simple trading can be. I call signals off my phone. That's how easy it has gotten. I don't even have to be in front of my PC all the time to make a signal call. So that is that. That is our outlook for 2020. Obviously, it's 12 months. A lot can change then. Another trade war can spark up. Boris Johnson can step down. World War III can happen. A lot of things can happen. But from a technical standpoint, this is what we see. And you get to see our beautiful portal. And we are releasing a brand new portal at the start of January. So this will be looking completely different. We'll have a trader journal, bunch of live sessions, signal alerts. It's going to be dope. So make sure you do your due diligence and sign up for the free trading room if you're into that. If you want to get the full benefit, get the full access for 25% off. So I am RP Forex, the one that runs these sessions, and I'll be your mentor throughout the whole time you're a client of ours. If you ever need any questions or need any help, drop them in our chat. It's free to chat. You can talk to me throughout the day. So with that being said, I hope you guys have a great Friday, a great weekend. Happy holidays. Enjoy time with your family. Enjoy that downtime, because 2019 was a great trading year for us, and we're looking to replicate that excellence in 2020. And we're going to move forward on with a better trading room and a new class of clients. It's going to be exciting, and I can't wait. But for now, everyone deserves a nice little break before it's back on the grind. So, peace. Have a great weekend. And I'm RP Forex, and I'm logging off.